What really bothers me is that you have a market where the sort of gross trade position is in the billions of ounces, and the physical silver available for settlement is in the 60 or 70 million ounce range. You have the possibility for a truly severe disruption given the extraordinary leverage in the silver market. And by the way, many of the things that silver bugs traditionally identify with silver price manipulation have to do precisely with this.
In his recent interview with Liberty and Finance, the founder of Rule Investment Media, Rick Rule, expresses concerns about the state of the silver market and the potential for significant disruptions. He highlights the vast difference between trading volume in futures and paper markets and the amount of physical silver available for delivery. This discrepancy means that many trades are settled in cash rather than with physical silver, raising the alarming prospect of a seller defaulting on their obligation to deliver silver. In such a scenario, the repercussions could be severe, potentially leading to widespread disruptions within the market. Given the high level of leverage present, where traders are borrowing substantial sums to invest in silver, a default could trigger a domino effect, exacerbating the situation further. Despite the potential for chaos, Rick doesn't foresee a classic short squeeze, where demand overwhelms supply, leading to a rapid price increase. Instead, he believes exchanges may suspend trading temporarily and settle contracts in cash at higher prices to curb turmoil. Given the recent fluctuations observed during Monday's trading session as we reached the 50-day EMA. However, the silver market remains volatile, with both the 50-day EMA and the 200-day EMA presenting challenges. Despite this, short-term pullbacks offer buying opportunities, particularly around the $22 level, a significant lure for investors. Yet, a breach of $22 could lead to a drop to $21, underlining the market's sensitivity to price movements. Furthermore, evidence of manipulation in the silver market suggests inaccurate reporting of industrial demand, potentially harming the industry and its workers. Global silver demand is forecasted to reach 1.2 billion ounces in 2024, but the Silver Institute hasn't given an update since November, raising questions about the accuracy of the data. While Rick refrains from alleging a long-standing conspiracy, he acknowledges manipulation in various markets, typically exploiting leverage in futures to influence prices artificially. This underscores the importance of vigilance and transparency in trading practices. We will present clips from Rick Rule's interview with Liberty and Finance. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
Don't know about the extent that will happen, that could happen. You and I have talked before, Dunnigan, about the fact that futures markets and silver paper markets often trade 200 times in a day the amount of silver available for physical delivery. Mostly, these trades don't settle in physical. Mostly they're rolled over, and only the differences are settled in physical. You could have a situation, you had a seller default, and that would be a truly ugly thing. Now, don't think that you're going to get a short squeeze, a real short squeeze. What will happen is that the exchanges likely will shut down for a while, and they'll cash settle. But they'll cash settle if that happened at a price much higher than today's price. So what really bothers me is that you have a market where the sort of gross trade position is in the billions of ounces, and the physical silver available for settlement is in the 60 or 70 million ounce range. You have the possibility for a truly severe disruption given the extraordinary leverage in the silver market. And by the way, many of the things that silver bugs traditionally identify with silver price manipulation have to do precisely with this. I'm not a believer that there's a decade-long or 2-decade-long or 3-decade-long conspiracy to manipulate the price of silver. But I note that trade desks manipulate every market, including markets as broad as the euro dollar, the euro, and the US dollar. Manipulating the silver market, where you take a leveraged position, long or short, in the futures market, which is often levered 300 or 400 to 1 against the physical market, and then using borrowed physical silver to dump into the physical market at some point in time during a 24-hour period, where the trading volumes are fairly small. In other words, you maximize the amount of damage that you do to the physical market to maximize the leverage gain that you get in the futures market. I think that's been happening continually for about 20 years. The temptation to do it, where you can sell, say, $50 million worth of silver, which you have to pay interest on, to move the silver market 5 or 6% down, and then have that 5 or 6% reflected in a futures market where you have a $500 million or $1 billion leveraged long position, means that you can, if you play your cards right, generate a 50% return on capital employed in a 2 or 3 week period. The temptation to do this is, of course, extraordinary. And the leveraged function of the futures market makes this fairly easy for deep-pocketed players, sophisticated players.
Global silver demand is forecasted to reach 1.2 billion ounces in 2024, marking the second highest level on record, according to a recent report by the Silver Institute. Stronger industrial offtake is a principal catalyst for the rising global demand for the white metal, and the sector should hit a new annual high this year, stated the Institute, a non-profit international association comprising various members across the silver industry. Silver finds primary use in industrial applications and is commonly integrated into automobiles, solar panels, jewelry, and electronics manufacturing processes. According to Rick, the report highlights a primary deficit of approximately 1.2 billion ounces for 2024. Notably, the report refrains from estimating above-ground inventories due to the challenge of quantifying privately held silver, particularly in regions like South Asia, where individuals often conceal their wealth from government scrutiny. Moreover, Rick notes the historical trend in precious metals markets, wherein gold typically leads bull markets. Silver often follows suit as investor sentiment shifts towards precious metals, experiencing heightened interest and price movements. Let's get back to the interview.
First of all, I'm delighted with the information from the Silver Institute, because neither Keith nor I have the resources to understand anything like the totality of the silver market. At the Silver Institute, they have a bunch of smart young researchers who do nothing else full-time. And the report, which I've studied in some detail, is an interesting read. It talks about the fact that there's a primary deficit for 2024 of approximately 1.2 billion ounces. It's important to note that the report doesn't attempt to categorize above-ground inventories for the simple reason that nobody knows. A whole bunch of silver constitutes private wealth, particularly in South Asia. When people hold private wealth to shield themselves from their government, they very seldom identify that private wealth to the government. So we don't know what the above-ground inventories are like. What we do know is that the low price for silver has made primary silver mining, that is to say, silver produced from silver mines, uneconomic or marginally economic in most cases. Most silver, in fact, is produced as a byproduct of copper mines, lead mines, zinc mines, or gold mines. And it is true that a recession, which reduced copper, lead, and zinc production, would probably have a deleterious impact on silver production, but silver demand might fall too, which is to say, if you are concerned about a recession, be concerned about the silver price. It will be a mixed blessing. It will reduce supply. It might reduce demand. It is important, though, to note that the low silver price right now depresses the biggest source of silver production, which is recycling. For many industrial applications, at $24 or $25 silver, the value of the money recovered in recycling operations is not enough to justify the recycling. And the industrial uses of silver are growing very rapidly. Its reflective properties and conductive properties make it absolutely a necessary component of solar energy, hence the Chinese fascination with silver. But importantly, too, silver is a wonderful germicide, and there are very rapid increases in utilization in water and wastewater treatment, in sanitation, and in medical. maybe the fastest growing application that we're seeing with regards to silver happens here. It's also important to note, though, that the quantum increases in silver price that we've seen occasionally in the past are really a function of investment and speculative demand. We've noted on your show before, Dunnigan, that historically precious metals bull markets are led by gold. They're led by the fear buyer. And when the narrative gains popular currency among generalist investors, that commodity with a lower unit price, which is to say silver, begins to move further and faster. So I think silver speculators will need to watch the gold market. I think it's important, too, to note that in every currency other than the U.S. dollar, we're in a gold bull market. So I think that's important to understand.
Silver price manipulation poses significant consequences for the economy and investors. It distorts market signals and negatively impacts mining companies and the silver supply chain. Despite manipulation allegations, factors such as rising physical silver demand and market adjustments can significantly influence silver's future market dynamics and investment value. How might ongoing efforts to combat silver price manipulation impact the future of silver investments and the broader economy? Share your thoughts in the comment section below. If you find this video informative, remember to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.